Hi everyone, let's take a quick look at the metals because I really like them. They are outperforming stocks big time this year, and that's probably going to continue all year. Metals are beaten down and unloved. The bearish sentiment on the metals is extremely high, um, and that's typically when they bottom, and that's exactly what we've gotten here. This is a weekly breakdown of gold. In a second, we'll look at a monthly and a daily. But you can see right here what I'm talking about. We had a huge downtrend, multiple downtrend lines, some of which were broken. First, we broke the downtrend to move sideways, and then we got that final flush. Bearish sentiment spiked. We got a weekly green hammer, which I really didn't trust. But gold has proven me and all the other bears wrong. Um, and that's typically what happens at the very end of a move to the downside. Everybody gets ultra bearish. Everybody was calling for sub 1,000 gold. Everybody was prepared for gold to move lower. And what happens? You get the opposite. Now, at first, this was just a counter trend rally. We were not regaining any key levels here. We were just kind of moving sideways. It looked like a great big bear flag that was going to flush again until this candle right here. This one right here. This is a monster candle. The one before it looked good, but this is follow through. And you can see when we add the volume picture, this tells a story. Okay, we have huge volume right here. One here. This was good, but it was really average. This is monstrous. This is big hands stepping in, big money stepping in, and there's no reason to fight this kind of volume. You're going to lose any fight against this kind of volume. This was a weekly close. Gold is not spiking on a daily time frame and then giving it all back. We closed at these prices. Now, this is a very extended chart right here. Don't get me wrong, I would not chase up here. This is not a good time to buy, but the bottom in gold has been had. You can see it fall back to test this key level at 119. There's also a very key level at 114, which I have right here, that could get tested, but I think you've seen the end of the downside in gold. Volume was huge. Let's go look at a monthly. Look at this monthly candle. This is enormous. This is a massive move. We had a little flagging action, push down. People were indecisive, so we got this kind of shooting star. Push down again, solid candle, possible trend change. Held that low on a monthly basis. When you hold the previous month's low on a weekly basis, and frankly, this candle did too. This candle held 112, the previous month's low. We closed above the previous month's low. And pretty much held it this month as well. If we slipped below it, it was only slightly, only for a moment, and then made a monster push higher. The next target is this gap at 123, of course, and above that, 130 is going to be a key level, key level for gold, right here. Gold could definitely hit some overhead resistance and pull back a bit, but this is not something you want to short. This is a chart you wait to buy. We should give back about half of this candle. 117, 119 would not be out of the question. Even a shade lower would not be out of the question, but there's no reason to short this move. Let's go look at the daily. The daily, this is GLD, not real gold, which is XAU here. This is the daily of XAU. Let's just use paper gold for now. Let's use GLD. This is obviously very gappy and extended. You got two sell tails on these candles, so this is not something you want to chase. This is really not something to buy here. But let's look at some moving averages. Just looking at the 50-day, the 50-day has finally started to take a really better curl up. I'd love to see the 50-day tested. We broke the 50-day many times here and gave it back. Broke it, gave it back. Couldn't hold it. It's a pretty bad sign. Then we broke out of it, and then really moved above it, of course, and the 50-day is now trying to catch up with the price action. Very bullish price action. Let's look at the 200-day. The 200-day is key. In a bear trend, the 200-day will act as resistance every single time. If we come back here, the 200-day was gained, lost, lost. And you can see the price really started to mingle with the 200-day. Fell, got above it again. Gold's been very, very choppy. Lost it again. Right here, came up and tested it, really lost it. And then we were losing the 50-day at that point. The 200-day really wasn't even a part of the equation. And now the 200-day has been brought back into the picture, and price is not respecting the downtrending 200-day moving average, and it's moving down only by 1 penny as of the close on Friday. If price action continues to chop sideways, the 200-day moving average will improve and start to curl and move higher. That's going to take a little while, so any gold bulls have plenty of time here. The 50 days got to catch up with price. That's going to take a while, and there's a lot of uncertainty in Europe. The uncertainty in Europe is going to continue all year. The Europeans, even if they quote-unquote fix the Greece problem, that is only a problem at the periphery of Europe. You still have Portugal in deep trouble. Italy doesn't look good. Spain doesn't look good. Even France is troubled. About the only place in Europe that looks okay is Germany. When the Germans are going to wake up and leave the EU, I don't know. But the EU is in desperate risk of falling apart. And that's really a huge impetus under gold prices here. The Europeans are expected to print a fresh $1 trillion. The Japanese have been very easy on their monetary policy. The Chinese recently loosened their monetary policy. We are threatening to tighten our monetary policy, but we haven't done it yet. So we're still extremely liquid in the amount of dollars that we inject into the markets. Any tightening on our part would put a headwind into gold's face, but as all the traders and all the investors know, the Fed can't really tighten. It has no room to tighten. If it tightens and the economy falters, they will have to step back in with massive liquidity injections, or we will return to a deflationary depression. I don't see the Fed throwing away 7 years worth of work and letting a deflationary depression take over. Why would that happen? There's just no reason to expect that. It's possible, but I highly doubt it. Gold investors are not interested in speculating on a deflationary depression. They can read the handwriting on the wall. World banks are essentially engaging in a currency war. In a currency war, you devalue your currency to beat your neighbor's devaluation of his currency in an attempt to stimulate your export sector. This doesn't work. It's never worked through history. It won't work this time. And all of this loose monetary policy is creating a massive bid to gold. And it will continue to all year. This is not a 1 month, 1 week event. This is going to continue all year. The authorities have not solved any underlying problems, and the stinking eggs, the carcass, whatever you want to call it, is getting uncovered again, and it's still rotting. So look for this to pull back to again, we'll have a look at volume. Look for this to pull back to the 50-day, because this is not healthy price action. This is really gappy. Look at this volume. Huge buy volume, buy volume, buy volume, buy volume. More here, more here, more here. The red bars are getting drowned out. They're getting drowned by green bars. We hit some light selling here, and then the buyers step in bigger volume. Light selling, huge buy volume. This is simply not a bear trend that you want to get in front of. On the bear side, you're going to lose. It took the bulls a while to turn this market around, but the sellers didn't give up. They kept selling. But they couldn't break it down. They couldn't push through 111, 110, 109. The buyers just started stepping in, and the short interest was so high on gold, this was bound to happen. It was bound to pop and ramp. And now it needs to calm down a little bit. This was capitulation right here. This was everybody that wanted out. When we lost this level, 114, very key level, when we finally lost it, all the stops are triggered and people sold. Sold a little more, few more stops. The last of the stops triggered here, right around 109, as everyone prepared for sub 1,000 gold. And what happened? Everyone's looking for sub 1,000 gold, and it doesn't come. So from the bull side, this is fine. We made a low, higher low, higher low, higher low, higher low. This finished here, and you had an ascending bullish wedge. This is the wedge. You could call it here. You could call it here. But essentially you had a wedge form, and it was trending up. When a wedge trends up, you get these pops, and that's exactly what we got. So I'd look for gold to pull back, maybe test the 50-day. It's got a big gap, big sucking gap here at 117, which is really far away from its last close. And you can see, this is on paper gold. On the actual gold market itself, there's a lot less gaps. There's practically no gaps, in fact. This gap was filled. All these gaps on paper gold are gone. Again, we have the 50-day down here at 1202. I expect that to rise, come up to about the 1220s, and I would expect gold to come down to meet it in the 1220s. 1220 has been a key area for gold all year. You can see support over here built in 1220. We lost it before and broke down through it, and I expect us to come down and find it this time, only this time it's going to act as support. There's no reason with this kind of move to think we're going to lose the 1220s. We are not going to lose the 1220s, and if we do, it won't be for very long. You can see right here on the bottom of these candles, buyers stepped in, buyers stepped in, buyers stepped in, and finally we built up support. Good support here, and then just catapulted right off it. This may not be done. We may go a little higher yet, but it's not a buy right here. It's just too stretched from the 50-day. Long-term investors will be fine, but short-term investors or traders are definitely going to watch gold this year. This is wildly bullish price action. The stock indices are not this bullish. The stock indices are becoming very hard to trade to the long side, very dangerous to trade to the long side. Even some investors are warning about heavy downside risk to the indices this year. This is extremely bullish. I like silver even more. Silver looks the same way, only silver has an even better base in my opinion. Again, this is paper silver. If we want real silver, we got to look at XAG. I mean, look at this. It was up 4% on Friday and the weekly. Let's look at some candlesticks. Put in a pretty good base here. It held 15. The sellers could not push us down through 15. And resistance was pretty solid at 17 and change, and we have smashed right through it on a closing weekly basis. The next target is 1884, right around the mid to high 18s. I don't expect that will prove to be very solid resistance for very long. Again, looking at a key moving average, let's look at the 20-week indicator. We have regained the 20-week. Let's look at the 200-day moving average. We have not regained the 200-day yet. It's up here at 18 and change. That could hold us down a little bit, but silver is pretty oversold. There's a lot of value in silver to the long side, in my opinion. It still has a bit of a downtrend here. That's pretty gradual. So we can make a lower high. That's all the way up in the 20s. The recent downtrend was soundly broken out of. We came out of this, and we're not looking back. The 50-day we have regained, and that should act as support. It's already begun to act as support. We broke it here, came in, tested it here, acted as support, and we broke out. Again, on volume. The volume on these moves, Okay, we're not going to see on this. We'll see it on paper silver right here. Beautiful volume. That's huge. RSI is above 50. MACD is curling up from an oversold territory, and there's just a lot to like about this chart on the long side. Got a little problem here. It's under the cloud. On the daily, it's broken out of the cloud on the Ichimoku cloud. Lagging indicator has not yet got there. Lagging indicator can come up and tag 1704 and then should come down and kind of work its way sideways until it gets out. The leading span is below price action right now, but it's going straight up, which is a very good sign. So again, I'd expect some give back here, but there's no reason to short the metals. You are going to get killed shorting the metals, and if you want to buy the metals, don't wait too much longer. You're not going to get another chance down here in the 15s on silver. You're not going to get another chance around 1100 on gold. Gold is not going to see $1,100 ever again. The lowest I'm seeing here is maybe 1200. Maybe 1175 if it got tremendously bearish near term. But the bulls have stepped in on huge volume, and they are not going to let this fall from here. This is not the type of volume that just gets penetrated to the downside. Not a week from now, not a month from now, not a year from now. Gold should be strong all year. Let's go look at the yearly chart. Nothing wrong with looking at a yearly chart. No one does it. This price target has been invalidated. And let's just look and see what we have. Started at last year's low, right around there, and moved straight up. Nothing bearish about that. Nothing. This is a bullish engulfing candle so far. I know the year's just started, but a major test will be at the high of this candle, which is 133.69. We will probably take that out this year, or at least test it. Support is right here, as you can see, pretty much right around the bottom of this candle. It was around, I think 1,070 was as low as we got, 1,050. I think 1,055 in the overnight is what gold actually tagged for a low. At that point, people on the street were telling you to short gold. And this is not going to fail to the downside. This is a very bullish chart. Very bullish. There's nothing bearish about this chart. Nothing. Paper gold is down here at 41. Huge run up. Got very extended, got ahead of itself. We had a give back here. Not uncommon. We had another kind of indecisive year here. Gold was weak. It was unloved, but people weren't ready to dump it. Long-term investors were not selling their gold year 2, and year 3, they're back in. This is the type of chart that moves higher again. Okay? You see 1, you see 2. This is a retracement. I'm willing to guess 38% retracement. I'm not sure what the percentage is here. I won't put my Fibonacci's on. And you should see the next leg higher. That's what typically happens in this type of chart. Again, this is going to take years. You're not going to get rich on gold tomorrow. But there's no reason to sell gold if you're a long-term investor. And if you're a trader, the trade to the gold this year is on the upside. Okay, wait for it to come in. Stay nimble. But there's been a lot of call options on GLD being bought. A lot of unusual call option activity. People buying a lot of call options a few months out, and they may very well do very well on those trades. I would wait for gold to calm down a little bit here. After the end of the month, and Draghi announces what the ECB action is going to be, how many trillions of euros they're going to dump into the market. Once that's over with, gold should settle down a little bit, but there's a strong, strong bid, even to paper gold, never mind the real thing. And this is going to move higher and make all-time highs probably next year and eat back probably half of this candle this year at least. I'm looking for 138 to 140 on the upside, 145, and that could be only the beginning. All right. Thanks very much, guys. We'll do it again.